orders. Yeah. So what specifically, Glenn, did you want to know about orders or pending orders, really? Like how to take it or something, or what? Where to place them? How to place it? Okay. So, I mean, placing the orders themselves is essentially going to be a situation to where you have to pick, like, are you going to be the first thing that you should kind of elaborate to yourself is, what kind of a trader are you going to be, in the sense of, are you going to be a type of trader? Are you going to be the type of trader that is okay with missing trades if you don't get the entry that you want? Because the whole premise of taking, an order, a limit order or whatever, is to get the entry that you actually want. And so if you're the type of trader that's going to be upset with the fact that your order did not get hit where you wanted it to get hit because the retracement wasn't deep enough or anything like that, then probably not going to be the best way for you. But if you wanted to place orders, I mean, this is an example here where if you got a second leg here, in the US session, a railroad track, right? And if you wanted to lay an order or put an order down, you would probably put an order halfway down the candle or something of that nature, to make it a 2-to-1 risk to reward ratio. But you could see here that if you put that order in, it wouldn't have gotten filled. But I mean, placing the order itself, or where to place the order, is quite simple. Your entry, you want it to just be the best, help you with the best possible entry when you're placing the order. So let's say, for this one here, so if you're going to trade this, let's say as a type 2 setup, okay, does this match the criteria for, let's say, a trade out of the edge? Let me know in the chat. Does this meet the criteria for type 2 trade out of the edge? Does it meet the criteria? Yes or no? So where's your entry going to be at? Where's your entry going to be at? I think I want to say, like, you guys are seeing this. I'm just going to assume this, but you guys are seeing this as a railroad track, right? That's what I'm assuming. Well, this would be for type 2, Leanne. This would be for type 2, right at the bottom of the range. So here's my point. How many people think this right here is a railroad track? Okay. So does it cover 75% of the candle of the previous candle or no? So if this candle, if the big red candle going down is 15 pips in size for the body, and this candle is 9 pips, is that 75%? That's 9.5 pips. Is that 75% of the candle? The answer to that is no. You need it to be 11. So this is not a railroad track to me. So the entry, if you're going to enter this, would need to be then after this blue candle here that closes above the 13 EMA, right? And so it would look something like this. That's what it would look like. What happens, right? Ends up taking you out. So if you were to get into this trade, after 6 candles, are you in significant profit? So here's the 6th candle. This candle here is a 6th candle. So is that significant profit? It's only 7 pips in profit, right? So it's not significant enough to be in profit. So you should close out of that trade because of that. But my point is to answer the question about placing pending orders is, if you were to place a pending order, you wanted to place a pending order when you have, let's say, a second leg that gives you a railroad track or star pattern, or something of that nature that you can use for entry, right? Because then you can place your pending order basically halfway down that candle, and you're really wanting to get a pullback. So a pending order would essentially allow you to get into the trade on a pullback, but having the best possible pullback, and that doesn't always happen. But as long as you are okay with that, as long as you are okay with missing the trade because you didn't get your entry and you're not going to be upset about it, then by all means you can do that, right? Your pattern to trade is here. This is a railroad track, right? So if you wanted to use a pending order, typically you put the pending order halfway down. And in this case, you could see it didn't go halfway down, so you would miss out on this particular trade. But you missed out because you wanted a very specific entry. And I guess that's my point about using pending orders, is that you're using pending orders because you only want a very specific entry, and you're okay with missing out on potential trade setups if you don't get that entry that you want. I think as long as you're getting a good risk reward ratio, that's really the main component that should matter the most. But just to make it easy, is basically a second leg. If you're trading type 1s, 2s, second leg halfway down the candle of a railroad track star pattern, quarter wood, just to make it easy to understand where to place them. It's just at least halfway down the candle. Just keep it that simple. Same thing, let's say if you're taking like type 3s and type 4s, right? And it's like one-legged pattern, right? It's the same scenario, essentially, is if you can get halfway up the candle on a pullback. So just keep it that simple if you want to use pending orders. Am I going to trade this weekend? I don't know if I'm going to trade this weekend, or this week, I should say. Michael, I don't know if I'm going to trade. How can I tell if it's a one-legged pattern? I mean, the only reason that I'm looking for one-legged patterns would be a type 3 or a type 4, or continuation trades. Those would be the only ones that I would be looking for a one-legged pattern. The rest of the patterns I'd be looking for 2 legs, no matter what. So type 1s, 2s, New York reversals, multi-sessions, those are all 2-legged patterns. If there's not a second leg there, to me, there is no trade. Type 3s, continuation, and type 4s are one-legged patterns. Hopefully that makes sense. But that's just to keep it as simple as possible. Yeah, those should be the only ones that you take. Can you take type 1s that are one-legged? Sure, you can. But I know that if you keep taking them over 6 months, a year, you'll end up with more losers than winners. And so that's why I tell you guys to take 2 legs, not 1. Matthew, wouldn't first leg trade? Yeah, trade out of the edge just means that the first leg was created in Asian session, and the second leg is at the very beginning of the London session. But the second leg has to be in the London box, and it has to be before like 4:30 or something like that. It's in the video, the specific time. That's why it's called a trade out of the edge, because it's at the very beginning of the London session. Yes, exactly. Two legs give you more confirmation, of course. Yes. I mean, I think a lot of the things that you're talking about, Matthew, with the banks and in the Caribbean and stuff, I experienced that in the Philippines also. Sometimes the ATMs don't have cash in them and stuff. Everybody over here uses like it's called Gcash. It's like basically, I don't know how to call it, but it's kind of like their version of PayPal or something, but it's very popular. It's like, you know how WeChat they use WeChat in China and stuff like that. Gcash is very popular here in the Philippines, and so you can pretty much go anywhere and pay with Gcash. But yeah, it's if you have money, I would start taking it out of the bank. You just don't know. All right, Sam. All right, Sam, are you here? Are you paying attention? Sam?
Yeah, I'm here.
All right, cool. So here's the answer to your question, Sam. I mean, just to keep it as simple as possible, so it's very specific conditions, Sam, that need to be met. But if you can use the same framework that you kind of already know, the topic itself is swing trading, and the easiest way is basically when you have a peak formation. So let me just give you the things real quick. So you need to have a new peak formation, right? That's first thing. Second thing is you need to have a 1350 cross on a 1 hour time frame. That needs to be there. And then one time ADR, right? It's basically the same confirmation that you would use to say, hey, this is a new peak formation, are the same confirmations you would use for this, right? Now, once you have this in place, right? Once you have that peak formation in place, then all you're waiting for is you're waiting for a pullback. You're waiting for an initial pullback after the peak formation. So let me just find one so I could show you. All right, so here's one. So you have a peak formation, right? You have your peak formation low here. You have your 13 and 50 cross. After the 13 and 50 cross, you're waiting for a pullback, right? The pullback in this case is here, right? This. So you have your peak and then your pullback. What you're going to do is you're going to pull out a fib, and you're going to fib from the bottom to the top of the pullback. Okay. And all you're looking for is for that pullback to come to 618. And then you take that.
Okay, that's simple enough. Thank you.
Okay. If it doesn't have a pullback, you're going to have peak formations that don't provide a pullback, then it's not a trade. The losses, I can already tell you, the losses are going to come when you have failed resets or when you have resets. That's when the losses are going to come, right? So, example here. So this would have been one trade here. Where's another peak formation? So here, this peak formation here, right, hasn't produced a pullback yet after the 13 and 50 cross. So there is no trade here. look at this here, right? Peak formation low. You fib it from the retracement, right? The retracement enters here. Here's the 618, right? It goes up and then it goes back down. It's a reset, right? So that's where you're going to get the losses from. As long as that's it, it's the only way you're going to get the losses. Look at this one here. The cross happened here, the pullback happened here. Well, if you fib it, right, does it go back to 618? No. So is there a trade? No. I'd say even the reset. Is there a pullback that happened here? No. So there's no trade here. This peak formation after the cross, which is here, do you get a pullback? And is that pullback to 618? No. If there's no pullback to 618, there's no trade. Here, a peak formation high here, you get a crossover here. Is there a pullback to 618? No, there's no trade. Do you get how this works now, Sam?
Yeah, I got it. Thank you so much.
So from here to here, or I'm sorry, to here, this is where the first pullback happened after the cross. Did it come back 618? No, there's no trade there. All right, so there's going to be times where you're not going to have a pullback that's deep enough, that allows it to go back to 618. So is there a pullback here? No. But this allows you basically to just go through different pairs. This is only one pair, obviously. So, but obviously there's no major pullback here after that. So there's no trade here. There's no pullback enough here. This one here, the first pullback after the cross is right here. This goes right to like the 50, close to 618. This one goes again to the 50. This one here goes to the 50. This one would not even have a pullback. This one here, this one got to 618. That's a trade. I want to say, let's see, this one crossed over. This one also a trade right here. Obviously, as far as stop loss goes, it just goes below the peak formation low. Now, the thing that you have to remember, though, is the fact that you are trading on a higher time frame. So obviously, you're looking at, I don't know, like doing, 65 pip stop losses to go, whatever, 120. So as long as you're okay with that.
Sure. Cool. Thank you so much. Got it.
So what I would do is look at the pairs, right? Look at the pairs, and out of all the pairs, which pairs have the least resets? Do you get what I'm saying? Find the pairs that look at the charts that you've already been mapping out or whatever, and see, okay, which one of the pairs, which pairs have the least amount of resets and stuff. Those would be the ones that you want to trade. It doesn't matter what pair it is. The important part is that you don't want to have a pair like this that has reset.
Right.
You don't want that. So that's before you start even trading this. That's the first thing that I would start to look for, is just look at the charts and just look at each individual pair and be like, right, do these pairs have a lot of resets? Do they not have a lot of resets? So like AUD USD, definitely you wouldn't want to trade. So that's what you'd want to do, is find out which pairs don't have the resets. But ultimately, if you can get a peak formation high and then a retracement after you get the peak formation, if you can get a retracement to 618 and then go back up again, that's your trade. That would be to keep it as simple as possible. Jack, that's what I would do. You could do 50 if you want to. I mean, that's all up to you. I'm just telling you what I would do. But if you want to pull back to 50, or if you want to pull back to 38, I mean, I would only be looking for pullbacks to 618. So, I mean, if you draw it out, just to even simplify it, right? Here's your peak formation. Here's your peak formation high, right? You just want this pullback here from when you fit it from here to here. You want 618 to be here and for price action to go there and come back. That's it. If it's from the bottom, same scenario. You just want 618 to be here and then go. That's all you're doing. I mean, you can keep the fib on the 1 hour and then go down to the 15-minute time frame if you want to. Yes, that's perfectly fine. I think what would make there's two different ways to look at it. Sam is trying to do it in the form of, I don't have a lot of time to spend looking at charts because I have a full-time job that takes up a lot of my time. So how can I combat that, you know what I mean, and still trade, but not having to constantly have, the to look at charts all the time, when I don't have a lot of time because my job takes up a lot of time. So if you're able to, to do that, let's say put the fib on, and then from there go to the 15-minute time frame and then look for a pattern there, right? Like type 2, whatever, type 3, whatever the case may be, that to help confirm that on a 618 level, that would be fantastic. If that's what you want to do, perfect. That's even, a stronger, obviously, confirmation or whatnot. But in this case, for Sam, what I'm saying is like you're putting like a pending order or something like that at 618, or an alert at least, so that way you could be alerted to when price action moves into that area, is what I'm saying. If you were to do that, and you put, let's say, an alert on TradingView or whatever, right at 618. All right, so you're here, you put an alert at 618 on TradingView, and then as soon as the price goes up to that, obviously you get the alert, and then you can make the decision, okay, I want to get into the trade or not. Or you can put a pending, sell the mid order up here. Yeah, so you could do that as well. And so that way as long as you have your your stop losses and stuff all put in place, then you should be fine. The only bad part that I've seen is obviously not every new peak formation gives you a pullback to 618. So that's the only downside that I would see. But I mean, here's one that does go to 618. And then, so even the ones that, sometimes, let's say this one here, right, touches 618, and you still get a good trade out of it, even if it ends up being, later on a reset or whatever. I mean, you still get a good, 160 pip drop from it. So if you want to do like, I don't know, 1.5 to 1 risk to reward ratio or something like that, that could be doable. You just don't want to do a 1-to-1. You're going to be looking, most of these, you're going to literally be looking at 50, 55, 60 pip, risk. And I mean, in this case, even though it was a reset, you still got well over a 2-to-1. But I think if you just stick to the simple rules of peak formation and then a pullback to 618, it's a trade. If it doesn't pull back to 618, no trade.